My name is Kirsten Bailey with the Center for Rural Affairs. Today I'm going to talk to you about record keeping for budgeting and marketing. Record keeping can be a daunting subject for most farmers. Record keeping takes time and is something that you need to do consistently. This can be hard in the height of the growing season when you're putting in those long days or when there's a lot going on. However, getting used to spending a few minutes per day updating the logbook of some sort can save you time down the road, save you money, and help you be better prepared for business meetings. It can save time and frustration during tax season and with getting future funding from USDA or others. What kind of records should you consider keeping? Some growers keep weather logs so they can evaluate their practices and yields. Livestock producers should consider keeping records of bloodlines, pests, diseases, feed types, and feed consumption. Vegetable growers should consider keeping records of varieties trialed and where they source their seeds and yields at the minimum. Regardless of what you're producing, every farmer should keep records of income and expenditures. You want to know how much money you're spending for what enterprise and how often you're purchasing supplies is. Keeping track of these few things can help you figure out your prices. You can also figure out how much money you need to break even at minimum to cover the expenses that you had. If you find yourself buying something very frequently, you might be able to get a better deal if you buy in bulk. The data you collect can help you make decisions on your farm. For example, you can evaluate the different enterprises and decide whether to increase production or drop an enterprise completely by looking at the numbers collected. It is also important to know if an expense can be used for multiple enterprises or if it's going to last multiple years. Record keeping does not need to be a complicated system. Many farmers start out using a shoebox or a folder for keeping records. They keep all the sales receipts in one folder and all the expenses in another. The advantage of this system is that it's very simple and easy to do. The disadvantage, however, is that the data is not well organized and you will often have to spend time entering it into a more robust system to extract the numbers that you need. Many accounting services have pre-formatted account books with categories common to agriculture. These books are typically less than $25. The advantage of these books is that they're easy to understand and the information is well laid out for accessing later. The disadvantage is that the information may not be laid out how you would like it and could be hard to find, and it is still a handwritten accounting system, so entering farm information could take longer. By taking a little bit of time during the off-season, you can set up an Excel or Google spreadsheet. This is a good compromise between a paper system and a more sophisticated software system. Google Sheets can be accessed on smartphones for on-the-go recording. It can be shared with other people on your farm who may need to enter data as well. The most common software program for financial management is QuickBooks. There are also more expensive industry-specific programs specifically designed for different agricultural enterprises. If you're feeling intimidated by QuickBooks, you can try out their Simple Start program. It is free and it's a good way to ease into using QuickBooks. Once you are ready to upgrade, you can transfer all of your records onto the full QuickBooks program. A simple enterprise budget can help you make decisions on pricing and what markets to pursue. By taking all of the expenses associated with an enterprise and then dividing them by the amount of product produced, you can see how much it costs to produce that product. Remember to factor in an amount for your time so you're factoring in a labor cost for yourself. That number can help you decide if you want to pursue a wholesale market which may have a lower price point, but you'll be able to move a higher volume of product. You might want to pursue a retail space knowing that they are likely to take a cut of the retail price, or you may want to do the direct-to-consumer sales, cutting out anybody who's in the middle of you and the end consumer. With direct-to-consumer markets, you usually can command a higher price but move less product. Knowing what your bottom line is will help you decide what market you can pursue and what markets may not work for your farm with the products you're producing. Let us know if you have any questions or need help setting up a record-keeping system. Thanks!